Hi everyone, welcome to another FX Lounge event. My name's Thomas Atkinson, as always. I'm here with Tyrone.
Hi everyone and welcome to this week's edition.
Yeah, exciting week a little bit less exciting because of the Easter break, but still some exciting stuff happening in the markets at the moment. Today we're going to talk about how to correctly identify support and resistance zones. So we'll just go through the normal stuff at the start. I want to let everybody know that this presentation / documentation is purely for educational purposes. The information in this presentation / documentation is of a general nature only. It does not take into account your specific needs or circumstances into consideration, and you should look at your own personal situation and requirements before making any financial decisions and seek independent financial advice if necessary. It's always very important to do that. So what we'll be covering today, very similar to last week, we've introduced the new Economic Outlook as a weekly event. We've got an exciting, we're actually doing the Australian USD dollar economic outlook today for the next 12 months. We've got some theory examples for support resistance, some real examples, and then of course we're going to dive deep into the live examples in the market right now. And we'll be taking a look at some of the trades we were looking at last week, seeing how they're eventuating, seeing how we can learn from that, and we've got some great student examples this week as well.
Perfect. Looking forward to getting into it. So we'll move on to the first slide, and we're going to look at support level and what a support level is. Okay, so as we can see from the line chart that we have on the screen, we've got three touches of what potentially could be a support zone. So once we see two touches of a similar area, now of course it's not always going to look exactly as it does on the chart, so we do have to take into consideration that price might be slightly above or below the previous level. But once we do see two touches in an area similar to this, we are looking out for a zone that we can consider will be support if it touches it again. So when we get to the third touch, we've definitely got a support zone that we're quite confident we'll be trading long if it gets there, and our next opportunity gives us a potential buy.
So generally the third or the fourth, as Tyrone said, we like to see two touches. There's a lot of nuances to this, which we'll go through in the live charts. But if we see two touches, we consider it potential support zone. And on the third touch or the fourth touch, we would look to buy it because, of course, this is support. Therefore, that's usually where the sellers have become exhausted and the buyers are going to hopefully regain control and the market is going to move up in our favor. So we'd be looking at profiting off the increase in price of buying for support level. The other thing I just wanted to talk about is when we're identifying support, I like to look at the first touch, then when that second touch happens, when it goes about halfway from the previous swing, I usually draw my support level. And I really like seeing it when it at least goes back to those previous highs. That's even better. But when it goes about halfway, I'll draw my support level. Now with resistance, very similar. It's the exact same thing, it's just the opposite. So it's when price is reaching highs and unable to break to a new high. So you can see here, one touch, two touch, comes about halfway down. We'd be looking at drawing our resistance level and potentially starting to think about placing trades on this third touch to sell or this fourth touch to sell down and profit from the decrease in price. So it's a really easy concept, but it's surprisingly hard to master. So something we'll go through today is how we break down the charts to actually find support resistance and how we use multiple different time frames to figure out the differences between good support levels and bad support levels and resistance levels.
That's right. And with the resistance and support levels being sometimes hard to find and isolate to be able to actually use them, because in hindsight, the support and resistance zones are obviously very clear, but the art of actually picking how to trade them is identifying them as they are forming. And if you do follow the two-touch rule, and as Thomas said, looking at taking or drawing your line once you've gone halfway down that particular break, then you are going to have a chance to identify potential take profit zones if you're long into resistance, or potential short zones when it does touch that area. Now, what we'll see later in the charts is, depending on what time frame chart you're looking at, that's where you're going to get your guide as to what sort of a reaction you're going to get. It is all relative to the time frame that you're looking. So if this was a 5-minute chart, obviously these moves would be quite small, as opposed to a daily chart or a weekly chart where the resistance and support levels can last for weeks and sometimes months. So it is very relative to the time frame that we're looking, and we'll pay particular attention to that on the live charts.
So I just thought I'd give a couple of examples of support before we dive into the live charts. So these are some of the history kind of charts on the odd yen daily. Now the great thing about support and resistance that Tyrone and I use is that you can use it on any time frame, but more importantly, you can use it on any currency or any pair. So if you want to trade oil, or you want to trade gold, or you want to trade the Australian US dollar, you're going to be able to use support and resistance as a trading kind of underpinning your trading, or as a trading tool to place your trades. So here we've got price coming down, and then it's steadily increasing, and it finds a level here. So this is our first touch to this zone. At this point, we don't really know whether it's necessarily support or going to be yet. Then price goes back up, and it comes back down. It touches for the second time here at B, and then it goes back up. So around halfway through this, we could definitely be drawing this as a strong support zone. And you can see how price has interacted with it later on. It's come back down, it's hit the same point as A and B at C and gone back up, and then price has increased, and then at D price has increased, and finally the trend, or the upward trend here, has continued on. So you can see that the profit making opportunities at C and D, which are the conservative buy zones based on our support, could be quite big, and depending on how we want to, set our targets, we could be placing some really nice risk reward trades, because all we'd have to do with these kind of trades is place our stop levels below the lows. So here, if I was buying at D, then I'd just place my stop level just below A's wicks, because that's the lowest wick. So you can see here, just here, I just place my stop just under there, and of course I'd at least be looking at a take profit, wouldn't you say, Tyrone, at probably around these highs. I mean, you'd probably look at the average of these highs and take it around there.
Yes, and for those of you who have been following the FX Lounge's weekly courses, you also know when we did look at channels that the take profit zone is actually quite clear here. So if you did enter at the D area and the C area, you could probably draw a line that would be very similar to what we'd be calling today a resistance line, which is a very clear take profit target. So we're getting very defined ranges here. So it's all about really taking into consideration where the support and the resistance is, and using your take profits and stop losses accordingly.
So here's an example of resistance. This is the Australian US dollar daily. You can see our first touch at A, a second touch at B, and then of course when it came down here, we'd be drawing this as a strong resistance line, and you can see how price has interacted with it at C, D, and E. So many times price has come up to this critical level, and it's been unable to break through each time. And of course, we could profit from selling at these points with the idea of price decreasing and us making money from that. I just want to touch and go back to that one in a second, but as a rule of thumb, we've got, for strength of support and resistance, we've got a couple of factors that may affect the strength of these levels. So the more times a level has been respected, generally the stronger it is. If we look at this here, we've got it touching 1, 2, 3, 4, 5, and we don't know what happened after that when we could go look at the charts, but it may have at least found some resistance there if it did come back up for a 6th time. The more times it touches, the more people that can see this, and that's a lot of trading. The more people that can see something, the more people that are generally going to trade that, and that's what you're looking for. Where are the big hedge fund managers? Where are the banks? Where are the big money players? What are they looking at? So when you look at a daily chart and you see something like this, you can bet your bottom dollar that a lot of other people are seeing this and putting big wagers on it or big trades on it. It's also important to look at a recent level that will have a greater significance over an older level. So if we're thinking about this, here we have a daily. This resistance level starts in 2012 and ends, what we can see anyway, in 2013. So for a daily, you might be able to use support or resistance from a year back. For an hour chart, however, you wouldn't want to look more than a month or two back at max. So
That's right.
really
And time
important.
frames do definitely come into it. So, yeah, as much as that rule isn't written, there it is almost an unwritten rule that the bigger the time frame of the support and resistance, the stronger the support and resistance is going to be. So, a 5 minute chart with support and resistance of 5 touches is going to give you
Yeah.
a bit of a breather for London session lunchtime, probably.
Yeah, it's
But,
5 and
yeah.
1 minute charts are only
Exactly.
going to give you
Yeah.
that shorter time frame.
But something like this Aussie dollar here, which is a daily, a very, very solid resistance level. And again, for those of you who are paying close attention to the support line, down at the 101, 101.50, you can see a very clearly defined take profit levels on this chart. You could draw a line almost linking up all of these bottoms. And basically, there is your target. So support and resistance are in essence forming channels. Okay, so when you look at channels, you're basically looking at a support line on the bottom and a resistance line on the top. So this is an extension of channel trading. It's just they are in isolation most of the time.
Again, we've got a live example of that actually on the Australian dollar soon. So just to recap on the rest of the strength of support or resistance, it can also be a level that's formed at a psychological number. So we touched on this in week 1. We were talking, I like to refer back to it as usually thinking about a stock. If you had a stock in the stock market reaching $100 for the first time ever, usually that will form some kind of resistance, and that's just because people like round numbers. It's like almost encoded into our DNA that we like round numbers. So $100 sounds pretty good to a lot of people. So a lot of people will be aiming for that figure to potentially take profit or unwind their positions. And because that happens, more people taking profit at $100, that means that there's less demand. So, because not many people are going to buy it at that psychological number, so therefore price can often come down and that can form a resistance level. We also look at things like a level of an extreme high or low. So again, this example is really great because you can see from the history we see anyway, this was the extreme high for at least over a year. And you can also see down the bottom here, like Tyrone was talking, where there's actually support. These look to be the extreme lows for this long period of time. So everything inside of these zones is just support resistance on smaller time frames, but these are extreme levels because they're very clear and they're the critical point where price reaches either a really high point and then gets rejected and bought back down, or reaches a really low point and then gets bought back up.
And just looking at that time frame, I think the last date we've got there is the 15th of April 2013. I'm pretty sure, without being 100% certain, that was the beginning of the death of the Aussie USD. I don't believe it broke past that 1.5 again. I think this resistance line was the death of its up.
Yeah, we can actually we can show you that one.
We'll look at that live,
charts.
but this
we'll
one pretty much finished it up.
So speaking of live examples, the Australian US dollar is definitely on our radar tonight. New Zealand USD as well. There's quite a lot of topical things to talk about there. And then we've got the Euro, Great British Pound. So let's dive into the charts now and take a look at a few of the things. So we'll start with the Australian US dollar. So I've left the charts very similar to what we were talking about over the last coming week. So we had that channel where we've got our resistance level up here that was broken, and then it went higher. And then, of course, we have our support that we've drawn down here in the 69 period. Now, just before we start talking about this area, let's go back over to what Tyrone was talking about, and he's 100% right. It never broke past. So here's our first one. So this was A, B, C, D, and E of our resistance, and then we had that strong support. And if you remember, this is a very strong channel, channel pattern, and you can see that when it broke through this channel pattern and formed a new low after breaking through our support, it just continuously plummeted. So there was fundamental factors that caused that, but as technical traders, if we just followed the charts, we would have been able to profit quite nicely off this Australian dollar. And it looks great in history, but even if you didn't see history, this is a very clear channel. So when you understand resistance and support, and you use that as the basis of some of your trades, then you're going to be able to profit quite a lot from taking these kind of trades, breaks of these levels, key levels.
Definitely. And the thing with support and resistance levels is they give us very clear understandings of where we want to put our take profits and stop losses. So in a sense, when you do identify them, they make it very easy to trade, okay? Because your risk and your reward is very clearly defined, and it's very important in trading. A lot of people have trouble, we find, placing where their stop loss should be and where their take profit should be. Quite often their idea of where to actually place a trade is quite good. It's about the take profit and stop loss that brings them undone. Yeah, the good thing with resistance and support lines is that you get very, very clear, defined levels that will keep you safe in a storm, but in saying that will also protect you if the channel will and eventually does break. Look, let's face it, channels and resistance and support are made to be broken. They're not going to be there forever. But by putting the stop losses and take profits in the correct areas, when it does eventually go against you, your harm is going to be minimal. Okay?
Yeah. So with Dan's just asked what these levels are. So it went up to 100 or 1.05. So $1.05, and the bottom is $1.01 approximately. So it's $1.01.50. But one interesting thing about this 1.05 or $1.05 is that's actually another psychological number. So when you see, if you just go to a chart, and I guess we can do it together a little bit if you'd like to. A few people are definitely asking for it. If we just draw the every 5 cents in the currency, so here's 1, here's 95, so we'll just grab 95, we'll grab 110, all the way up there off the screen, and then we'll grab 90, and we'll just zoom that out a little bit, and we'll go over here, we'll grab, there's 110 already written in there. You can see that if you look through history, look how often price does find support and resistance on these numbers. So we've got the critical points here where price reached right at that 110, then price has come down, it's broken through, it's found a bit of support at some of these levels. So it found support initially at 1, then it broke through that, and then it found support at 95. Then you can see the 105 became a strong resistance line, and you can see here when price first came down to the 90 level, it found some support there as well. So if you're finding a reason to potentially buy at these levels, and you've also just got this psychological number, it can be quite, I guess, compelling why you should trade these. I mean, look at this. Here we have the 95 cent mark, comes back up, tests that 95 cent mark, and then you can see here it again tests that 95 cents. So multiple times it was finding resist or support first, and then that turned into resistance, and that happened several times. So it's amazing how the markets work and these psychological numbers can work. And this happens on all of the currencies. So if you just put every 5 cents on euro, US dollar, if you put it on Great British Pound, US dollar yen, you'll generally find that it works on multiple currencies.
The Aussie dollar is just a very good one to look at because it just gives us such clearly defined patterns. Again, for the avid followers of FX Lounge, do you remember the flag patterns that we talked about a couple of weeks ago? We've got flags. We've got flags galore, on the way down here on the Aussie, and as you can see, like we stipulated last week, once one flag forms and does its thing, another flag inherently forms and does it again. Each of these moves is nearly equal to the previous one. And again, in hindsight, it always looks very sweet, but when you identify the particular areas where price might break, it actually does become very tradable in the current moment. So it's very important to take care to notice all of the levels that we're talking about today, because they are usually key levels of where a big price move is going to start, especially if a pattern is there to justify it.
Definitely is. Okay, what I'd like to do is we're just going to get rid of these lines because I want to break down how we draw support and resistance and how we look at the charts. So I actually begin generally on a monthly chart. So let's just have a look at a monthly, and I usually go to a line chart before I do anything else. So the reason why I like to do this is I like to know where those critical points are in the market. So if we just draw some support and resistance that we can see very clearly, let's draw a few here. You can see over here, price reached this point, price reached this point again, reached this point, did break through here, but then again, it's come back down. And this is also around that psychological number of the 70-cent mark. So what I like to do is why I use a line chart is it's the close price. So this gives us a really good average kind of area where we could be considering taking profit or considering buying or selling. It doesn't give us the perfect thing because it's a monthly chart, but it does give us a bit of an average.
It can take out a lot of the noise that actually happens in candles and bars. It just gives us a nice, clean look at the chart.
So there's a few that I've just drawn that we could have drawn pretty much before any of this even happened because it's all based on previous history. So this would have told us straight away that if price came down potentially to this 80 zone, we may want to look at reducing our sold position because that could be support. If it did break through to there, there's a high chance that it may go to the 70-cent zone because that's generally what has happened before. Price went from 70 cents over here to 80 cents. Price then broke through the 70 cents here, went to 80 cents, came back down. And when we move this to a candle chart, you'll see it spikes these zones. And here we've seen it come down to this 70-cent area, and then there's been quite a resurgence in the Australian dollar recently, which is caused more by the US dollar weakening against every currency, but it's definitely going up at the moment. So we start with the monthly. I like to start with the line chart. Then we go down to a weekly usually, and then we'll readjust our lines to make them a little bit more accurate. So I like to readjust them using a line chart still. And I add any extras that I can see. So we can see we've got them down here. And then potentially this could be our resistance area up here. And then we've also got our two peaks here as well. So let's now break it down to a daily chart. And again, we can just readjust and just get a little bit more accurate based on those closes. And you can see this line chart. It's really amazing how the price is interacting with it. So it's coming down. It does find some kind of support at this level initially, and then it comes back through. And then that support level here becomes a resistance level when price was going back up. So it could again become resistance if price comes over here. It's quite interesting. So now that we're on the daily chart, let's just break it down to a candle pattern. And we can see here that we've got a clear channel that we've been discussing for the last couple of weeks. And we can also see that the distance that we've been drawing for the last couple of weeks, which is the projected amount because of the channel, if you go back and watch that one, you'll see it. We can see that price is moving up and has now broken past our first level of resistance, or what was once support is now resistance. And now price is breaking out. It looks like it might even make a new high tonight and then go on to our take profit area for this trade, which is around 77.8. So that's where we'd be targeting. So Tyrone, got any other comments, I guess, about this?
I'd just like to add that once you've broken down the charts in that manner by going from a line, monthly, weekly, daily, if you notice when you do move back to the candle or bar charts that a lot of the time the closes do happen inside the resistance and support zone. So although you are getting breaches above it and they do pierce these lines, you can see that a lot of these candles are actually pulling in and actually closing inside of the support. Okay, so
if we move it over to a weekly, you can see it actually here. Here's our line. It's gone up, it's broken through, and then by the end of the week, it's come all the way back down and closed underneath.
So the bears have given us a very good idea here of what's actually going to happen at this point of resistance. It did find a little bit of support there, but when it retested that zone, the bears just took over and pushed it all the way down. And once we had that big bear candle in there, the show was over for a little bit on the Aussie dollar. And most people who would have been trailing that and actually do follow candle patterns would know that that's also an engulfing candle, which it did signal even more strength of that resistance zone holding.
Yeah, we'll hopefully cover engulfing candles in the next coming weeks, and they can be signals for us to potentially trade or exit trades. So that's a good entry signal. Now, what I want to touch on is because we've gone from the monthly all the way down to the daily, we can now look at, if we color code each one of those time frames just by changing the line color, we can now see where those big support and resistance levels are, and we won't get caught on the smaller time frame. So I know a lot of people have been messaging me with scalping trades, more on the 5-minute, 15-minute chart, but it's still important to know these critical zones because you don't really want to be trading into critical zones into the direction of, I guess, support. If you're selling, you don't want to sell into support, and you don't want to buy into resistance. So by just having these on your charts and just when you're doing your analysis, even for scalpers, they can be very, very valid. The other thing I wanted to talk about was that somebody asked, there's quite a few here that you're drawing where it's only one touch. It is only one touch on these bigger time frames, but if you drill down into the smaller time frames, let's say on this one here, we drill into an hour, or it's probably going to be a little bit hard to go back. Not sure if this is the one, but generally on a smaller time frame, here we go, 1, 2, 3, then it broke through. So you can have quite a few touches on the smaller time frames to these zones. So you got, if we just bring that down a little bit, we've got kind of 1 here, 2 here, 3, and then it broke through. So just remember when we're looking at those zones here and we're drawing them on dailies and weeklies, if it looks like congestion on those time zones, it's probably a lot of congestion on the smaller time zones. So very, very valid for when we're trading the smaller ones like a 4-hour or 1-hour time zone.
And the 4-hour time zone can't be underestimated, although it pales into insignificance compared to a weekly chart. A 4-hour chart pattern can be very, very powerful and lead to many, many pips if you get it right. So quite often head and shoulders on a 4-hour chart could easily net you 2 or 3 cents. So as much as it is smaller than the daily and the weekly, it does give you very, very good swing trading opportunities.
And by also drawing these zones, we're actually able to figure out when I like to call the bits in between these support resistance zones on the bigger time frames kind of like dead space. So it's a space where the market is most likely going to gravitate to the next level. And if you get caught, if you say here we've got buying Australian dollars, so the Australian dollar is going up recently. It's now just broken a new high and it's moving quite quickly up right now. But what we might be seeing is this was our first take profit zone, but there's a decent chance that it will probably try to gravitate up until the 80-cent mark. And it's not 100% anything, but it could do it. And this would be, usually I would be looking more at buys now that we've broken past this key level. So I wouldn't be looking at sells at the moment on the Australian dollar, at least for the short time. I'd actually be looking at buys. So here's our support. The support's been broken, which became resistance. It's been broken now. So I'd be looking at retracements to this level and potentially buying, which the level's 76-ish cents. And I'd be looking at potentially buying long into these highs. That could be definitely a trade.
Yeah, I think if we're looking for the signals to make these decisions on, what we'd want to be doing is actually taking the chart out and making it look a little bit bigger so we can actually focus in on candles. Here we go. So what we can see now, for this to be a confirmed break to the upside, what we're looking for is this candle, or the price for that matter, to actually close above that previous high. Okay, so if we look at this particular candle now, and we are going to go into candle patterns in the next few weeks, so pay attention on those ones because they make things very, very exciting. But what we're looking for here, if this is going to be a confirmed break to the upside, we're going to want to see price on this particular daily candle close above this level. Okay, so it's going to be an interesting London and New York session tonight, because if the Australian dollar can continue on and finish up above this candle, the signals for it going long are fairly significant. But at the same time, if the bears kick in and we get a close below the top of this candle, it is going to be another bearish sign that this potential zone may not break as easily as people anticipate. And it could signal a reversal all the way back down to the top of this channel back at 73.
Yeah, so we just want to always wait for confirmation. I think it was our top tip a couple of weeks ago. Wait for the confirmation. If you're seeing it happen, let's look at the most visual time frame. In this case, it's the daily. We would wait for that daily close above the significant resistance zone, and then we would potentially be looking at buys in the Australian dollar. So wait for the daily to close. It always happens every day, and then we can look for buys, and that's just being conservative, I guess. And they say that the trades that you're not taking are your best trades, because they're the ones that the trades that you're correctly analysing that are losing trades are the ones that
that's right.
Are best.
And confirmation is king. So if you wait for the confirmation, that will win the day in the end, because it makes a difference between a winning trade and a losing trade, probably more so than actually picking the direction right.
Yes, and I spoke with one of the FX Lounge members this week, Matthew, and he was actually showing me a trade he did, and he was trying to figure out where he was going to take profit. It's actually this candle here. He shorted the Australian dollar, so very close to that resistance level, and he did it because he considered this what they call a shooting star candle pattern, and it goes into having that extra confirmation on top of support and resistance. So he hadn't actually drawn this as support and resistance, but he shorted because of the candle. It turned out it was actually a really decent zone to do that. He sold it down, and then he took profit at the end of this candle here. Now, he's kicking himself because, of course, he saw all these pips missed. But by drawing support and resistance, he would have been able to say, well, if it's coming down, it's probably going to at least come down to the previous level. So I would have gone to a line chart, because I really like line charts for taking profits, and I would have probably looked at around this level here, because the price has come down here, it's found support, it's gone back up, it's come down here, it's found support, it's gone back up. So this would have been a really excellent little take profit area. It did go on to make more, but the difference between his take profit, which was 100 pips, he could have easily had another 150 pips, and that would have still been very conservative take profit.
That's right. And I'm hoping that what most of you today will take out of this is that with support and resistance being such, especially on the bigger time frame, such a drawing, almost like a magnetic influence on price, it is going to get there if the right indicators and the right breaks are showing it. So it gives us a very clear indication that if price does break out of here, the Aussie dollar is going to go to 79, and if it breaks down to the bottom of the channel, it's going to 73. And that's just, it's almost a factor of nature that's going to happen. You can see it's been doing that right through all of the big time frames. So when we do get a clear identification of where it's going, it just makes it so much easier to trade it.
Obviously no guarantees, but the thing is, it's all about probabilities, and the probability is usually in our favour when we correctly analyse those charts. So I just wanted to show a couple of others. I've got the euro pound we were looking at on the daily a couple of weeks ago. We had this channel again. I think it was week 1. We can see that we have this support line through the bottom here, and we have this resistance line. And because we know with channels, when they break, they usually go to the same distance, we can see that that's actually completed now. So it completed fully just about 2 weeks ago, and it hit our full take profit, and it also hit previous support, which is now becoming resistance. So it's amazing. If we zoom this out a little bit, we can see here, look at these lows. These lows would have been a perfect take profit zone for us, because it's happened. It was a support zone, price broke through, price came back up, tested these areas, and it turned out that that was a great take profit area. And we don't know what's going to happen with it now, but it would be more likely that I'd see, it keeps going down and then up and up, down and then up. But as Tyrone was talking about, if we see a break of this critical zone up here, so we see a break high and a close on this daily, we may be starting to look for buys in the euro pound. So just by recognizing those little things and waiting for that confirmation, we can have a few different trades on our, radar. I think we're running a little bit low in time, so we'll go back to the PowerPoint presentation because I wanted to show everyone just some of the economic news that's coming out this week. So, of course, what news to look for? Everyone always asks me that. They asked Tyrone that. The big ones are Reserve Bank Chairman talking. Whenever that's happening is very important. The monetary policy decisions. Obviously, we talked about the USD yen last week, but there's always different monetary policy decisions happening, so always be aware of those. And this week is the non-farm payrolls week. So it's the first Friday of each month, and you'll see if you go to your economic calendars on Friday, non-farm payrolls. So very important one. Yellen is also coming out and talking this week. So last night that happened. I believe the US dollar moved quite significantly because of what she said. So remember, Reserve Bank Chairman talking, very important. We always need to be aware of what they're saying and when they're saying it. But non-farms is the biggest news event of the month every month. So I usually suggest you don't trade it. Because it can be quite whipsawy. The market will move up in a direction, possibly 100 pips, and then it will move all the way back down and go the opposite direction, and people are like, how did that happen? It's because non-farm payrolls is very, very difficult for the market to initially figure out. When they get a figure, it's always wrong to the figure that they thought it was going to be.
And good news isn't always necessarily good news, especially when it comes to non-farm payrolls. So what one interprets as good news could be very bad news for somebody else, hence why the market acts so choppy and just goes from one end to the other so often. It's interesting to watch, terrible to trade.
Yeah, I would suggest everyone watches it. If you haven't watched it, definitely go check out non-farm payrolls because it's an exciting movement. I mean, I remember I've traded a lot of them, and I still remember some really, really big moves that have happened off non-farm payrolls each way, where we're talking 200 pips each way in one night. Made no sense whatsoever, but it was because the market got a drastically different result to what they thought it was going to be because it is jobless figures, or how many people are unemployed in the US, and no one really knows how to interpret that, and that's why you'll see strong trend generally come out of a non-farm payroll the next week. So on the Monday or Tuesday of the next week after non-farm payrolls, you'll see strong trend starting up, and that can have all month flowing effects. So quite interesting. And of course, this week we had a lot of bank holidays, so that's meant it's a little bit slower on the currency side. So after popular demand, we've got the 12-month predictions of the Australian US dollar. So I've got some of the big houses and what they're saying. It's been sourced from Bloomberg Terminal. We're lucky enough to have that. So UBS, they're currently saying that in 12 months they believe the Australian US dollar to be at 68 cents. We've got JP Morgan at 72 cents, Barclays at 68 cents, and Credit Suisse at 73 cents, with a median price of all, I think it's about 100 brokerage houses claiming it's going to be at around 71 cents by the end of the year. It's really interesting when you look at it because I think Credit Suisse are saying at the moment it's going to go to 78 cents and then it's going to come back down. And it does prove one thing, that no one's 100% sure where it's going to go, but they all are coming to a general consensus that it's going to float around in this range between that 68 cents and around 78 cent per area.
What do you think, Thomas? Where do you think it's going to go?
I don't like to predict, Tyrone. But I use the charts to predict for me. But
I'm quite happy to say that I have absolutely no idea. I think it's going to be somewhere between 65 and 80, and I think I'll just leave it at that.
Well, you're pretty much them, except you've got a wider range. You're fence sitting as far as I'm concerned. But it's a really interesting one, and I always like to know what they're thinking because sometimes it can be drastically different to where the market's at, and that could be an opportunity. So we'll continue this segment, and I think a lot of people really liked it last week.
We'll certainly keep an eye out for it.
Now, with the last week's examples, I just wanted to quickly retouch on a few of those. We've got the USD yen that we talked about, and we talked about a potential pennant that was here. It's starting to look a lot less like a pennant on the daily, so let's have a quick look there. And you can see that it really tested anyone that was looking at this or trading this, it really tested our stop losses. So price broke low and then it came back up, and remember our stop losses were just here. So it really came back, and our confirmation entry was here. Yeah. So really came back and tested.
Anybody who got greedy on that trade is out of this trade now. So
so
shows the importance.
It shows the importance of proper risk management, that's for sure, and also believing in your trade, because it looks like it might be coming in to move down to our projection, which is down in this area here, about that 105. So could very well happen, and non-farm payrolls could be the kick it needs to push it lower. Hopefully it does. Now, the other one I wanted to show everybody was the USD Swiss. We were talking about flags last week, and we were specifically looking at one that didn't eventuate, but what I did want to look at was that it ended up forming one, and then that ended up being to the profitable side. So I think we were looking at this because it had flagged before, and then we were looking at down here and potentially trading a flag. And we can see that because we were waiting for confirmation, we never entered this trade. It actually never made that low that was the confirmation of the flag. So if we skip all of that bit off, you'll see it looks very flag-like like this. And then because we didn't get greedy and we didn't trade early, we waited for it, and we may have missed the trade, but there's actually one over here on the smaller time frames. So if we go to an hour chart, let's zoom that out once, you'll see here we had a flag. Of course, we can't, there we go. So we had a flag here. It actually broke here, and then it came back and really tested our stop losses quite a few times, and then eventually went down. And you can see another one that's just formed here, and it looks like it's off and running as well. So quite a few little interesting trades. USD Swiss is an interesting pair ever since this happened. So I'm not really big on trading it, but it definitely does present some opportunities. So that's
many traders have not forgiven it for that.
Yeah, I'm sure there's many that have not forgiven it indeed. Then we've got this one, which I've always been looking at, which is the flag that we had on the pound CAD. We're still hanging in there with it. It's up and down, and this may look like it's just going up and down a little bit, but actually it's going up and down 400 pips because it's a daily trade. So stop is all the way up here. It hasn't been even tested yet, but we hope it doesn't need to be tested and it comes back down, forms new lows over the next coming days.
And I hope today's lesson hasn't been lost on everybody, and they can clearly see our resistance that was up there that signaled the beginning of the end, and also the support that's going to find here, which is pretty close to where our target's going to be.
So if we look at those critical points, if we go back out to a monthly, and we'll see here, look at that, absolute extreme zones. Here it is. Here's that level that it got to recently. Here's our next kind of level that we're expecting it to potentially go to. And then, of course, we've got our extreme lows. So when you're seeing stuff like this happen, where it goes to extreme high, where it hasn't been there, well, since at least I've got chart data here, since 2010, it's just an amazing thing by recognizing the basis of just support resistance and critical zones that we could have just sold off here, and and then we could have said, oh, well, it'll at least go down to these lows. And if that happened, if we'd done that, I mean, that's 1,000 pips. And that's looking at a weekly chart, of course. But our stop for that would have only had to have been above these highs. So we're talking an 80 pip stop for 1,000 pips. So sometimes the risk reward can be massive on these kind of trades.
And especially when you're looking at the bigger time frames. So if you identify the pattern or the support and resistance on a weekly or daily, your basically your risk versus reward trades are phenomenal. They can be absolutely phenomenal.
Can be really cool stuff. So as always, send in your current trades. Really love looking at them. I do reply to some via email. We'll leave the email in the chat today. And I guess I'd like to say thank you to everybody for coming out.
Yeah, thanks again, everybody. And we do appreciate your feedback. So keep it coming. And we look forward to talking to you again next week.
See you then.